On the Perfinex channel, we discussed that German real estate in 2023 will be a whole lot different than German real estate in the 10-ish years before, which had some of you guys wondering if it's a good time to buy properties in Germany right now. It certainly can be if you do it right. Because one thing's for sure, in uncertain times like these, great fortunes are being made. You just gotta have the balls to do it, and you need to know what you're doing, of course. And to help you buy a property in the best way possible, here are 5 tips for successful real estate investing in 2023 in this GermanReal.Estate blog. Successful real estate investing in 2023, tip number 1. And I know some of you guys are tired of hearing me say this, but you need money. Who would have thought that, huh? But it seems some of you guys still have trouble following that logic when you consume 6-7-year-old content with people saying that you can buy a property with €0 in the bank. Back in the day, that was possible. But not anymore, and here are 2 reasons why. When buying a property here in Germany, you have closing costs, ground purchasing taxes, notary, land registry, maybe a real estate agent, and this can be easily 10% of costs and fees that come on top of your property value. Do you have to have that in cash? Not necessarily, but it helps significantly. Because the less money you have, the less creditworthy you are, so the higher the interest rate for your mortgage. And exactly this interest rate is the second reason why you probably won't make passive income with your rental property, at least in the beginning. The standard mortgage contract has 3.5% to 4% interest rate right now. On top of that, you have to pay the bank usually 2% for principal. 4% interest plus 2% principal is 6% in total that you would need in return on rent, and we didn't even factor in the other costs that you have with real estate, like property management or insurance. We're just talking about the mortgage here. If you have no money yet, but you think real estate is an exciting investment, which I completely agree by the way, then check out the properties on our GermanReal.Estate marketplace. We have a lot of different properties or property developments giving you 8, 10 or sometimes even up to 12% interest rate. This will help you to build equity for your own future property purchase, and you'll make some juicy passive income as well. Second tip for successful real estate investing in 2023, relax. Netflix and chill. Keep calm and buy and hold. I'm working in the German real estate industry for the last 6 years, and let me tell you, the last 6 years have been a lot more hectic than 2023, which is good. In the past, you needed to reserve a property immediately after seeing it for the first time. Then the bank was giving you their mortgage offer in 2 or 3 days and then straight to the notary. Was a little hectic, to be honest, but so many people wanted to buy properties that you had to be that fast in order to have a shot at securing a property. 2023 is much more relaxed. The increased equity requirements and interest rates, which we talked about a moment ago, wiped out a lot of fun buyers. All these people that were visiting properties and applying for mortgages because of free money with 0.some% mortgage rates. They are gone now. Again, that's good. Because now there are only the really committed people left that have at least a decent financial situation. And most have realistic expectations. And so should you. Because you're not gonna get rich with real estate tomorrow. So take your time, relax, and buy a really good property. Really good property, what does that mean? 2 things. First is the third tip for successful real estate investing in 2023. B and maybe even C locations are really attractive. With the increased mortgage rates of tip 1 and the cool down market in tip 2, property prices here in Germany came back a little. Makler is showing a decrease in property prices of -1.9% in Q1 of 2023 and -6.2% compared to last year. Compared with other asset classes like bonds, stocks or crypto, that's pretty good because all of those are down by about double digits, and I still don't think that we're in a real estate bubble. Property prices increased 2021 by 14.2% after inflation. So it's fine if they go down by 6.2% over the last year. Is it not? The real question is, where are property prices going down? In the McMakler study, which is linked in the article on our website by the way, it shows that property prices in the top 7 German A locations tend to be pretty stable. Property prices in the B locations came down a little more, making that even more attractive than before. If you follow our channel, you know we're a big fan of B and C locations, and that is also why I bought the property near Düsseldorf last year for us, for the community, that you can invest in together with me. And the second thing which makes a really good property is the 4th tip for successful real estate investing in 2023, the property itself of course. It might sound a little obvious, but you can have the best location in Germany if your property looks like this. And yes, this is a real picture of an offering we got from ImmoScout. The property is not even worth the ground it's standing on, because it has to be completely demolished and built new. Now, if that's a conscious decision, if you have an insanely high tax rate and you buy a monument building or a crappy shack like this in order to declare tax-deductible renovations, alright, then it's fine of course. But for everyone else who doesn't make 300 or 400,000 taxable income every year, a single, twice as much for a married couple, everyone making less than that should probably not engage in real estate ventures like this. Rather buy a property with a high quality already. Good location, good property, kind of new or completely new, and you'll have a great investment in the making. And with that, you will also get the 5th tip for successful real estate investing in 2023, government benefits. You get tax benefits as a real estate investor anyway, and not as a homeowner. That's why we're big fans of renting instead of buying, at least from the strictly financial point of view. And since some of you guys have been asking, yes, you get also tax benefits from investing in our real estate security. Indirectly of course, because you don't own the property, the SPVs holding the properties file for tax benefits, which increases your investment return. So you get the tax benefits even easier without even filing for them. And with the right property, we can increase our tax benefits even further. I talked about our property in Düsseldorf before, right? It's a new construction that will finish in 2024, which means we will get 3% depreciation instead of 2% depreciation. That's 50% more tax benefits, which are explained in detail in this video. And with a sustainable property with a really good energy standard like ours in Düsseldorf, you can also apply for government subsidies like various KfW loans, for example. The newest program is explained in this video. And if you're too late for the most recent KfW program, don't worry. They're already planning a completely new one which you can apply for when it's ready. We'll keep you updated here on the channel. Those are our 5 tips for successful real estate investing in 2023. Now go out, utilize them and secure a great real estate investment for yourself.